Good morning. It's Wednesday, time to look at the stock markets. We'll start with the US stock markets and then we'll have a quick look at the FTSE and the DAX, the monthly chart, even the S&P in a very clear bull trend. I'm sure I don't need to tell you that. The weekly chart, we see what's been happening over the last year or two. We had the COVID pandemic, market crash. The Fed flooded the market with more QE and of course we took off. We had that move down in 2022. Then we had some stabilization over the last 6 months. We've really just been trending sideways, as you can see from this daily chart. Going back a year, we're trading at 41.74. That's exactly where we were a year ago. So we went down to 3,500. Now we've jumped back up to around the 4,200 area. This is an important area. We've got this white trend line, just show you again from the monthly chart. This trend line goes back to the end of 2014, beginning of 2015, joins the peak up of 2018. It managed to hold the peak just before the pandemic broke in 2020. So it really is an important trend line. It even held the recovery after the pandemic when we moved up at the end of 2020. And then, of course, when we broke above it, let me just open this up a bit. The trend line worked perfectly as a support level. If all you did was trade this trend line, you'd have done really well. It didn't work so well in this area when we had extreme volatility in the middle of 2022, end of 22, beginning of 23. The trend line is working again. So this trend line, as I say, goes back to 2014. I just wanted you to understand the importance of this trend line. And there it is, the upward sloping trend line, which matches perfectly the green 500-day moving average. So there is a lot going on at around the 4,200 to 4,210 area in the EMA and the S&P. Going back to the weekly chart, try keep up. 23.6% fib, 41.86 is the value, taking the pandemic low up to the all-time high. We've got a 23.6% fib at 41.86. So that's very close to the 4,200 area that I'm talking about. That should add some extra weight to that resistance. And it's certainly, look, the blue 500-week moving average, the 100-week and the 500-day moving averages usually have very close values for obvious reasons. I'm sure you can figure that one out for yourself. So we've got the 100-week, the 500-day, the 23.6% fib over a 3-year period, and the trend line going back to 2014. There is a lot of resistance up here for the E-mini S&P. The volatility has decreased as we have edged up towards this resistance area. We're now starting to see some dojis on the daily chart. You can see 1, 2, 3 dojis. That indicates sort of a balance in the market. The doji is when the market opens, probes up, probes down, and then closes mostly unchanged. So you get a very small body on the candle, and you tend to get long wicks either up or down or on both sides, as you can see here. Over the last 8 days, we've got 6 dojis. This can indicate the end of a bull run because it shows the market's coming into balance, getting ready for the next move. There are lots of indicators that suggest the market could be finding a top. The slow stochastic has been overbought now for a long time. I don't base a trade on it because it can stay overbought for a lot longer. The NASDAQ, I do not have quite the same resistance. We're approaching the 100-week moving average at 13,471. The flatlining 500-day moving average has a value of 13,489. I can't see any pattern that would indicate to me the market is about to turn lower. If anything, this is probably a bull flag, which is actually quite positive. It's a consolidation pattern. It's not a reversal pattern. A reversal pattern would indicate the market's going to turn around and go down. It's more of a consolidation in a bull trend, which implies that eventually we break up. So that doesn't back up my theory that the S&P could be finding a top. But it doesn't mean that we can't break the lower trend line and go down. So I'm not saying we won't go down. It's just I wouldn't be basing a short position solely on this chart. Dow Jones, good run up from the pandemic, obviously mostly trading sideways as we recover from last year's losses and trade mostly sideways on the weekly chart. Let's get the daily chart up. Really no clear pattern that I could base a swing trade on right now. We have got a really strong trend line, actually. I would pay attention to this. It's around 34,700. That joins the peak from February 22. Do you know what? I'm going to try redrawing this. You should join 2 consecutive peaks. I guess I could argue that this is actually a valid trend line. I'm going to leave both those trend lines on. I should have put that on earlier. The idea of drawing a trend line is it covers as many peaks as possible. And this trend line really does do that. In fact, I could even sort of fine tune that trend line, I think, and draw that here. Now, that makes things a little bit different, doesn't it? You can tell I didn't prepare for this video. So this is a much better trend line. This trend line catches this peak here just nearly, and this peak here, and this peak here, this peak here. So it's 1, 2, 3, 4, 5 peaks. We overran here, but there's no daily closing above that trend line. So I'm just going to assume that was a full spike. And of course, we backed away very quickly from there. So we are actually hitting very strong trendline resistance in the Dow Jones. Some dojis on the daily chart, as you know, indecision, a balance between buyers and sellers, which could, in such overbought conditions, indicate that the market might turn. May even get a rounding top pattern. It could be quite a slow process. So we are undoubtedly at important levels in the US stock markets. I can't really believe this, but the DAX is actually approaching the all-time high. A nice double top there, look, with red candles on the monthly chart. I'll put the monthly chart up just so you can see. 16,045 is as high as we've got. 16,295 is the high. So we are less than 300 points away from the all-time high. Clearly, there's no problems. Who cares about the war? Who cares about inflation? Who cares about higher interest rates? Who cares about the ECB talking about higher rates to continue to fight inflation, which they still believe is a problem? Clearly, the stock market doesn't care at all. I don't understand it. But anyway, my job is just to follow the charts and tell what is likely to happen, not to try and read fundamentals into this. I think this proves that fundamentals have no bearing whatsoever on the stock market. If you're a fundamental trader, I think you probably would have been in a lot of trouble over recent weeks. I'll end up on the FTSE weekly chart, and you can see we're in a bull trend daily chart. FTSE also had one heck of a run up from the March low, as if the world's economic problems have been resolved, as we head towards the February 23 high, which is 8,020. Good luck if you're trading stock markets. Keep an eye out for some more videos this week. So make sure you are subscribed and make sure you ring that notification bell.